Hello, everyone, and welcome to the latest episode of the David Hittle Real Estate Show. My name is David Hittle, and I am a realtor with United Real Estate Louisville. And I came live a little early because I accidentally clicked the live button. My bad. So we started at 1:59 instead of 2 o'clock, but it all works out in the end. So today we're going to be talking about whether or not the housing market is correcting. There's a lot of stuff in the news about what is happening with our housing market, what's going on in our economy, and what is happening to real estate as a whole. And we're also going to talk about whether now is a great time to sell your home. It's important if you're currently a homeowner to know what your home may be valued at, and to know whether or not selling is a good idea at this point in the housing market process. And then finally, we're going to talk about the dreaded home price depreciation and whether that is something um, that is happening in our market. So let's get started today. Before I get started, though, I'd love for everybody to visit my website. My website is shopkentuckyhomes.com. And on that website, you can search and you can find available homes that are on the market today. You can also get market reports about what is happening in your individual zip codes and what is happening in the neighborhoods in which you live or a neighborhood that you may be interested in moving to. You can find out things such as what the average price is in that neighborhood, median price, days on market, etc. So visit my website, shopkentuckyhomes.com, and join up so that you can receive all of that information anytime you want it, day or night. It is available at shopkentuckyhomes.com. So the first thing we're going to talk about is whether the housing market is correcting. So what is happening in today's day or in this current market situation is that the Federal Reserve is raising treasury bond interest rates. It's all they can touch is treasury bond interest rates. So the Federal Reserve is currently raising interest rates on treasury bonds. Now, treasury bonds are purchased by a variety of people, including you and me, but they're purchased by banks, they're purchased by lending institutions, et cetera, et cetera. So when these prices go up, or when these interest rates go up, it doesn't cost more to buy the treasury bond. The bond stays the same, but the amount of interest that the government is going to give at the maturity of that treasury bond increases because of the interest. So, what is happening in today's market is that the Federal Reserve, in an effort to stave off inflation, as you can, if you've gone grocery shopping, if you've gone and bought gas, you know that inflation is a real thing and it's really happening right now. But in order to try to stave off inflation, the Federal Reserve is raising interest rates. So again, interest rates going up on treasury bonds means that the interest rates on almost everything else is also increasing. The mortgage interest rates usually follow treasury bond interest rates. So if treasury bond interest rates go up, so too shall the mortgage interest rates. And this week they did. This week they skyrocketed. Last week, your average 30-year fixed rate mortgage was at 5.23%. This week, that skyrocketed to 5.78%. And I'm actually hearing that they went over 6%. Uh, I guess this weekend, they increased up over 6%. So, what is happening in today's market is that mortgage interest rates are on the rise. And they're on the rise for a variety of reasons, but they are on the rise right now, specifically because of what the Federal Reserve is doing. The Federal Reserve has started the process of increasing the Treasury bond rates. They started back in March of this year. And since then, mortgage interest rates have skyrocketed. They are actually double. The mortgage interest rate is actually now double what it was 6 months ago. So, what does this mean for you? Well, this means that if you are a home buyer, if you're looking to purchase a home, especially if it's your first home, you are going to pay more for your home. Your mortgage interest rate goes up, which means the amount of money you are paying each month on your mortgage is also increasing. With that being said, mortgage interest rates are still under the average. The average mortgage interest rate since they started recording mortgage interest rates is around 8%. So if we are at 6% today, we're still 2 percentage points below the average that the market has experienced since they started recording. And of course, decades ago, back before I was even born, mortgage interest rates were in the 12, 15, 18% range versus being around that 6% range today. So again, if you've read those headlines, if you're following the news and you've read the headlines that the current housing market is the boom over? Is the market crashing or is it correcting? And here's what you need to know: the housing market is moderating compared to the last 2 years. So, the last 2 years, the real estate market has been going amazing. Home prices have been skyrocketing, which means if you're a homeowner, that's a great thing because your value of your home has been skyrocketing. But mortgage rates had stayed low. At one point, they were under 3%. So now we're starting to see this housing market start to moderate. And what everyone is talking about is that over the past 2 years, mortgage interest rates have been at record lows. And with those record lows, millennials reaching their peak age to purchase homes have led an influx of buyer activity. While at the same time, there were not enough homes available to purchase thanks to many years of underbuilding and sellers who held off on listing their homes due to the health crisis. So the combination of this has led to record high demand. We still see that record high demand and record low supply, and that wasn't going to be sustainable for the long term. So the latest data shows early signs of a shift back to the market pace seen in the years leading up to the pandemic. It is not a crash or a correction, according to Realtor.com. What they say is the housing market is at a turning point, and we're starting to see signs of a new direction. So it's very specific. Realtors, me, we talk about a buyer's market, a seller's market, or a stable market. So what does that mean? Well, a seller's market means that the housing market is great for sellers. We're still in that seller's market. And how we get there is that we have high demand but low inventory. So it's very similar and actually the same thing as the supply and demand that you learned about in grade school. If there is high demand but low supply, prices go up. If there's low demand but high supply, prices come down. What we are seeing today still is low supply but high demand. But what may be happening is that because of these interest rates, and on top of the interest rates now driving up, we also have high home prices because of the years where we had low mortgage rates and high demand. We may start to see a shift more towards a stable market where we will have equal demand to the supply. If that occurs, then home prices will start to decelerate rather than accelerate. They will even out rather than increase or drop significantly. However, on top of all of that, we are still seeing that there is record high demand for homes. And we see this through technology. And us realtors, we use an application, most of us anyway, use an application called Showing Time. And Showing Time allows us to enter a property that is listed on the market at a specific time using a lockbox. So, from the data that Showing Time has, showings skyrocketed in the last 2 years. Before the pandemic occurred, there was not a month where Showing Time indicated more than 200,000 monthly showings. However, as the pandemic waned, and actually even during the pandemic, we saw almost 300,000 monthly showings according to their data. So in March of 2022, Showing Time indicated that there was 285,000 showings in the month of March. In April, it did fall a bit to 251,000. So, what will be interesting to find out is whether May and June sees a drop as well. Because if May and June see a drop in showings as we saw from March to April, then we may start to see a more stable market because demand is falling for homes. I saw a meme on Facebook yesterday about it was a realtor that posted it, but they said if you have any home sellers that thought you were wrong about the home prices, you can now tell them you told them so because the change is occurring now and it may become harder for our home sellers to sell their homes if this demand starts to creep down. So the 2019 numbers gave a good baseline for pre-pandemic demand, which was all under 200,000 per month. And now that has skyrocketed. So we're still seeing strong demand, but it's going to be important to find out whether or not that demand starts to wane. And you can count on me to find this data when it's released for May and June. So existing home sales are also doing what they've been doing. Existing home sales are currently currently below their seasonal level, but they're above the pre-pandemic level. So 2019 existing home sales, there were 5.3 million homes sold by this point in 2019. In 2020, which was of course during the pandemic, we saw 5.6 million home sales at this point. And then in 2021, we saw 6.1 million home sales at this point. So, what we're seeing from that data is that we are actually seeing demand start to wane a little bit because current levels are 5.6 million. So right now, our market is looking similar to the 2020 demand, home demand or home buyer demand is looking equal to what we saw in 2020, but 2020 we had really low interest rates. In 2022 we are starting to see those interest rates rise, and that started to occur in that March through today's activity. Today, we're again, we are double the interest rate that we were at 6 months ago. So that is going to have an impact on home buyers' purchasing power, and it's going to have an impact on demand, in my opinion. So, First American sums it up this way: today's housing market looks a lot like the 2019 housing market, which was the strongest housing market in a decade at the time. So again, I believe we're going to start to see demand change. I think we're going to start to move closer to a stable market where we have equal demand with equal supply. If that occurs, then home prices will stop accelerating. They will start to moderate, but only time will tell to see how much of an impact these mortgage rates actually do have on home buyer demand. So the bottom line here is, if you have read recent headlines and they are generating concerns for you, you need to look at a more typical year for perspective. The current market is not a crash, it's not a correction, it's just a turning point towards more typical pre-pandemic levels. And if you have any questions about that, we should connect so that I can speak with you about our local market and what it means for you when you buy or sell this year. And it is important. It is important to stay up to date and stay knowledgeable on what is happening in our real estate market. The real estate, or real estate in general, is one of the largest drivers of our US economy. So if housing starts to take a hit, then we may see the overall economy take a hit as well. And of course, there's also talk about a recession because of these rising interest rates by the Federal Reserve. We may see a recession. The stock market, the Dow Jones Industrial Average, has now fallen below 30,000 for the first time in great many years. So it will be important to see what happens in our housing market, and it is important to stay tuned and stay up to date on what is happening, and don't let the media or the news or the headlines of today scare you into making decisions that are not going to be good for you in the long term. But as always, you can visit my website, shopkentuckyhomes.com. And again, those neighborhood market reports are amazing for finding out what is happening in your neighborhood. You can see how many homes are selling in your area and how much they're selling for, so that you can understand what your home may sell for. You can also contact me. I can run a home valuation for you if you are interested in selling your home. Um, and we will run the numbers and see if selling is right for you. But any instant, please visit my website, shopkentuckyhomes.com. So, is it a good time to sell your home? Well, a majority of consumers actually say it is a good time to sell your home. So maybe you're a homeowner and you're thinking about selling your home. You're probably looking for the best time to move. And you're also reading these news headlines and you're worried about it. And you're wondering where you'll go when you sell, today's mortgage rates, and in order just to make it right. But according to recent data, that sweet spot could already be here. The latest home purchase sentiment index, which is done by Fannie Mae, finds that 76% of consumers believe now is a good time to sell. That's pretty good. So, according to the data, 76% believe right now is a good time to sell a home. That was compared to 72% last month and 74% the month before that. The highest level that this sentiment has ever gone to was 77%, and the lowest, according to this data, was 29%. So 76% of consumers say it's a good time to sell. But what makes it a good time to sell? What makes today a good time to sell? Well, one reason so many people think it's a good time to sell is because there are still more buyers in today's market than there are homes for sale. And that is true. We haven't seen what the data is showing about demand and whether that demand is really falling off yet. Um, it will be, again, interesting to see what happens with these higher interest rates, with almost 6%, possibly even being 6% interest rates, whether or not that causes demand to start to wane. But still, from the data that we have for today, there are still more buyers in today's market than there are homes for sale. And that is what is driving home prices up. And that is making it a good time to sell your house. So if you're on the fence about whether or not to sell because you don't know where you'll go or where you will get to go once you do, know that you have more options today than in previous months because listings are actually increasing. The number of homes coming onto the market has grown each month since the start of the year. So when more homes come onto the market, it gives you more opportunities to find one that meets your changing needs. The bottom line here is while the number of homes available for sale is growing, it gives you, as a home seller, more options for a move. Inventory is still low overall, and that could mean it's a great time for you to sell if you are ready to change, to address your changing needs and take advantage of today's favorable conditions. Let's connect today. And that is true. That is all 100% true. While mortgage rates are going up, and your next home, if you have a loan on it, may cost you more. A lot of people who are selling their homes have a lot of equity, have a lot of equity sitting in their homes. So when they sell their home, they're going to take a chunk of profit. And those same people can then go and put that profit down on their next home. And even though the interest rates are going up and they may be higher than the home you currently have, the difference will be seen because you're going to be upgrading or downsizing into a home while at the same time protecting yourself and getting the most money you can out of your current home and shifting it into your new home where you will gain equity in that home as well. So the final thing I want to talk about today is home price deceleration. So there's all these D words. So you got depreciation, deceleration. There's a lot. Home price deceleration doesn't mean home price depreciation. So there's a difference. Experts in real estate, in the real estate industry, use a number of terms when they talk about what's happening with home prices. Some of those words sound a bit similar, but mean very different things. To help clarify, here's what we need to know, and this is what you're probably hearing. Appreciation is when home prices increase. Depreciation is when home prices decrease. But deceleration is when home prices continue to appreciate, but at a slower pace. And that's probably what we are about to see occur in today's housing market. For starters, you've probably heard that home prices have skyrocketed over the past 2 years. That is entirely true. They have been up at some points 20% nationwide. And For this quarter, or for the first quarter of 2022, home price appreciation nationwide is at 18.72%. So nationwide, 18.72%. And you might also be surprised to know that home prices have risen for 122 consecutive months. So that is going over now 10 years. Home prices have been increasing. They have been appreciating for 122 consecutive months, a little over 10 years. So since 2020, well, before that, houses have gained value consistently over the past 10 consecutive years. That's what I was talking about. But since 2020, the increase has been more dramatic as home price growth has accelerated. So, why did home prices climb so much? It's because there were more buyers than there were homes for sale. It's all the supply and demand curve. High demand, low supply, increased prices. That's what's happening. The imbalance between demand and supply put upward pressure on home prices because demand was high and supply was low. But what are the experts saying home prices are going to go? Now, mind you, no expert is calling for prices to fall. But here's what the experts are forecasting. Fannie Mae is forecasting a home price appreciation of 10.8% in 2022. Freddie Mac comes in at 10.4. Core Logic is saying 9.6. HPES is saying 9.3. The National Association of Realtors, which I am a member of, is showing a home price appreciation of 8.4. Zellman is saying 8.3, and the Mortgage Bankers Association, they predict the worst at 2.7%. The average of all of those is 8.5%. So if home prices increased by 8.5%, you can just imagine how much your home, you can calculate for yourself how much your home has appreciated on average. Mark Fleming, who's the chief economist at First American, identifies a key reason why home prices won't depreciate or drop. And he says that in today's housing market, demand for homes continues to outpace supply, which is keeping the pressure on home prices. So don't expect house prices to decline. And although housing supply is starting to tick up, it's not enough to make home prices decline because there is still a gap between the number of homes available for sale and the volume of buyers looking to make a purchase. Terry Lobes, who's the founder of the research firm Pulsenomics, notes that most real estate experts and economists anticipate home prices will continue rising. As he put it, quote, with home values at record high levels and a vast majority of experts projecting additional price increases this year and beyond, home prices and expectations remain buoyant. So the bottom line here in all of this is that experts forecast price deceleration, but not depreciation. That means home prices will continue to rise, just at a slower pace. We should connect so that you can get a full picture of what's happening with home prices in our local market and discuss your buying and selling goals. So the market is changing. We can see it before our very eyes. Us realtors are experiencing it, we feel it, we are seeing it. So if you have a real estate need, having a realtor by your side now is more important than ever. You do not want to sacrifice your home's value because of fear, and you do not want to lose money or to make mistakes because of uncertainty or the headlines. So if you have a real estate need and you are in need of a real estate professional, you can get in touch with me. You can contact me via my website, which is shopkentuckyhomes.com. And you can also contact me. My contact information is in the description of my videos here on YouTube. And if you're watching me here on Facebook, you can get a hold of me quick and easy there as well. So I hope everyone stays in tune and up to date on what is happening in our real estate market because times are a changing. Things are changing. The market is starting to shift. And I want everyone that I know and everyone that I have contact with, and those of you who watch and who trust in me, I want you all to be up to date and not fear what is happening because it's just a different situation. Just times are changing like they always do. So please visit my website, shopkentuckyhomes.com. I wish everyone out there a happy Father's Day, and I hope to see you all back here next week, same time, same place. This is David Hittle with United Real Estate Louisville. Have a great day and enjoy this beautiful weather. Have fun. Enjoy.